All right. Good morning and welcome back to the Money Advantage podcast. This is Rachel Marshall, Bruce Wayner, and Becca Wilhite from our team. Welcome, guys.
Good morning.
Thank you. Good morning.
So, if you are listening today, you are in for a treat because today we're going back to our series about some of the biggest myths or misconceptions, the misperceptions, the mostly truths, but not fully all the way true, things that people hear in this world around the idea of infinite banking. And so today we are going to really be able to unpack what is true, what is fiction, and help you be able to sort through these details so that you can make the best financial choices in your financial life. So today we are diving into a myth that you may have heard on the streets. You might potentially believe a little bit yourself. You might, I like to call the internet streets. So, people are out there doing their research, trying to figure out what's right. And you might have heard, yes, infinite banking. That's just a sales tactic for whole life insurance, or that's just a sales tactic for permanent life insurance, or for universal life insurance, whatever. It's a sales tactic for life insurance. So, we're going to dive deep on this today. We're going to unpack exactly what is true and what is not true about that, and really be able to set you free to make the best decisions in your financial life so that you can be equipped with financial control. So, Bruce and Becca, thank you for joining me for this courageous and really important conversation.
You
Yeah,
bet. Glad to be here.
yeah. First of all, I like to get this out of the way. There's nothing wrong with selling something. Uh, that's the whole world goes around by selling something. So the free exchange of goods between parties. I mean, that's how things get done. And Nelson would be very, very happy to say that. I knew him personally. I mean, he was a capitalist through and through. What, but in his book, the first sentence of the second paragraph, he says, "What this it is not a sales tool for life insurance agents." And unfortunately, before he died in 2019, he saw that happening I would say the last 10 years from about 2009 when I met him um, through 2019 when he died. He tried to do something about that, and one of the big things he did was implement the practitioners program so that you could be authorized to actually understand what the problem. That takes me 360 degrees back to what I started with, was that it's all right to get paid for something if you're solving the problem. And herein lies the issue. Most people that are an insurance agent that are using it as a sales tool don't even know what problem they're solving. They're just trying to say, look at an illustration and say, look at all the cash value you're going to have. They're comparing it to another financial instrument where you're trying to figure out who can have a bigger pile of money at the end. And they don't understand, and this is what Nelson differentiated with authorized practitioners, is the problem isn't that people don't have a big enough pile of money. The problem, because they're not getting a greater rate of return. The problem is they don't have a bigger pile of money because a lot of money's flowing out of their control because they don't control the banking function. Who has that bigger pile of money? The bankers do. Okay. So that's how you can tell, or at least begin to tell, if a person is using infinite banking as or any of the iterations that people have made up. You know, the wealth system, or what would the Rockefellers do, or all these
Bank on yourself.
bank on yourself. Yes.
Or
All
even the term privatized banking, which we use.
Yeah, well, Nelson actually used privatized banking himself to try to get people to understand that this is not about I don't think people take what he said and realize what he was trying to say. It's not about whole life insurance. He actually has a whole section in his book that talks about this. You could do this with other financial instruments. It just so happens whole life insurance actually has the most character or the most of the best characteristics that you can do the banking function in your life. So whatever iteration they're saying is if they are just focusing on the illustration and saying, look at this number on the page, you're going to have more capital here 20, 30 years down the road. They don't really understand that that is not the problem trying to get a bigger pile of money by getting a greater rate of return. The problem is that if you do not take the banking function into your life, you're never going to have a bigger pile of money. The bankers are going to have the pile of money. So that is
End
kind
of podcast.
of,
It's been said.
that's what we're gonna start the premise of what we're going to talk about today.
Absolutely. Bruce,
So
I really just appreciate that clarity on that because that is really what we're addressing today. What is infinite banking? What is banking? Why is it infinite? And what is whole life insurance? And how do they even connect really at all? Becca, I would love to pivot to you for a second. I would love your thoughts on all of this and kind of where you see this myth or this really big misconception of almost like a synonymous overlay of infinite banking, whole life insurance. They're one and the same. It's just a method of utilizing a product and they're basically the same. Where do you think that comes from in a way that is so believable that misleads people so much?
Well, I think Nelson talks in his book a lot about the seen and the unseen. And I think the seen is like Bruce was saying, the numbers on the page, the numbers on the illustration is something we can compare and we can break down and we can look at this illustration and that illustration. And so I think, like he was saying, if you don't really understand the problem that we're trying to solve, then you just automatically gravitate towards the scene. That's something I can hand somebody and show them and kind of try to interpret for them without them really understanding what it is. It's just number. It's bigger number better kind of a thing, right? So I think that the unseen is kind of what Bruce was saying. Where is your money flowing? Who's capturing that? Who's benefiting from that? And that's not anything you can really quantify on a page, but it's a lot of times we'll use the illustration of an iceberg. If you've ever seen those pictures where above the surface you see what's above the surface, but the majority of the iceberg is underneath. The vast most of the mass and of that is unseen. And I think it's the same way with our financial lives is we gravitate most people don't understand their finances anyway, right? So we gravitate towards what we can see. We can see account balances. We can see maybe rates of return. Possibly, we can see projections of rates of return. We can see these things, and these are the questions people tend to ask because they don't know the better question to ask of not just what's my balance, what's my rate of return, but where is my money flowing? Who's controlling that? Who's benefiting from that? And so, yes, whole life is the best tool for taking over the banking function in your life, but it's just a part of it. It's not the starting place, and most people start there. I did when I was first starting out. I thought that's what it was all about, and so I think I've had to go through a process of unlearning and relearning, and that probably goes on for the rest of your life. You unlearn and you
Yes.
relearn. But yeah, I think people want something they can see and this tangible can touch, and this isn't really that. Until you get into it, and you're like, oh, okay. Now, it's kind of like riding a bike. Once you can only learn so much about riding a bike by reading a book about it, right? You ultimately have to get on the bike and start riding, and then things start to make sense. Oh yeah, that's what they were talking about. That makes sense. Now that I'm doing it and experiencing it, um, that's a lot easier to see those things that maybe were previously hidden from us.
Becca, I love how you shared that because I was talking with another team member, Joe, over the weekend about this exact topic. And I think what's really interesting about this whole thing is that I think often what can happen is anyone starts making a decision for a reason that they can understand, right?
Mhm.
So maybe you buy the health coaching because you're trying to solve a weight problem or a specific body measurement or like there's a specific amount of energy or you have a tangible thing that you're trying to solve. And I'm purposely putting an example not in the financial space, but we have a feeling or a measurement or a thing that we want to solve and we try to solve that. And that's what our lens is that we currently know. And when we begin to solve that thing or we initiate the solution, then you find yourself going down the rabbit hole, and then all of a sudden you realize, okay, well, what I really was trying to solve was not a weight issue. It was maybe an energy issue, or maybe it was a flexibility and a stamina issue. Maybe really what you wanted was not to have a different number on the scale, but maybe what you really desired that you figure out once you start solving that problem is that really what you wanted was to be able to run around in the backyard with your grandkids and play tag without falling on the ground or injuring yourself because you overexerted. And I think it's the same with infinite banking. I mean, in all honesty, when I think about my journey into infinite banking, Lucas and I came to infinite banking because we had been storing cash in gold and silver. And it came to a position where it wasn't as liquid as we realized that we needed to have. We didn't have as much access to that capital because it lost a lot of value, and then you had to go find a way to be able to sell it. And we couldn't access capital when we needed capital. We could, we just lost a lot of money doing so. So it was really, really painful. And that was around the 2008 timeframe. Now, when we started using infinite banking, we were looking for a better place to store cash. And we said, okay, we need liquidity, we need access to this capital, we need it to be more liquid and more touchable rather than putting it somewhere that really is just for the long term that can't serve me in the immediate. And so we did a lot of research. We ended up landing in infinite banking. Now, what's interesting about that is that the problem we were trying to solve personally was liquidity. And then as we got into understanding what infinite banking can actually do and started using it, we were like, oh yeah. So we can redirect the use of this capital. We can use this capital for certain things. That's going to change our ability to direct capital into our control. And I mean, Nelson was just so wise as I continue to see the way that he communicated was because I think he understood that sometimes people need to be met where they're at and then brought along on this journey. And then he says, rethink your thinking, Becca, exactly what you're just saying.
Hmm.
That recognizing that what I thought was the problem really is not the actual problem. And if I keep pursuing this rethinking my thinking and I continue to be humble rather than having that arrival syndrome, I will begin to understand the full benefits. And honestly, I just look at Nelson's picture of getting into infinite banking as well. He didn't even realize the power of a tool that he already had. He was certainly not saying, I'm going to reclaim the banking function when he started his initial whole life insurance policies. He came to that realization later. And I think that it's just really profound to be able to see what the real problem is, though, and communicate that and help people along wherever they are on that journey. Because we know that gaining control will absolutely impact their financial life in a positive direction for the rest of time.
Yeah, as I was thinking about preparing for this episode, I was thinking about how do people differentiate between somebody that is using it as a sales system and really they do not understand it themselves, and people that I'm not going to say they totally understand it because, as Becca said, we're always on this journey of learning and relearning and having aha moments. Frankly, just exactly like Nelson was. But I think the number one thing is if you go back to like the five tenets that have been established by Nelson over his 60 plus years of being a life agent, and then the last 40, um, he wasn't in infinite banking then, but he started seeing how it could take control of the banking function. And the number one is to think long range. And so as soon as people start looking on the paper and saying, oh, look, the first year, you're going to have 95% of whatever you put a premium in right away, they're not thinking long range. Now we can dig into this even greater because you do have to help the client meet them where they are. But Nelson even says in his book, he says this book is not about investments of any kind. It's about how one finances the things of life, which can certainly include investments. It's not about rate of return. As time goes by, interest rates go up, interest rates go down, but the process of banking goes on no matter what is happening. And that's kind of been the revelation I've had the last 5 years when a person says to me, um, I don't want to, I don't want you to show me an illustration that has me putting premiums in after age 65. I'm going to be retired and I'm not going to have any more money coming in to be able to pay these premiums. Matter of fact, I'm going to be making less money in retirement. So why would I continue to put this in? And I'm like, well, are you going to stop storing money in the bank? I mean, I don't understand that. And that didn't hit me till about the last 5 years. So now I'm going to dig into this a little deeper and I'm going to go down. I'm going to try. You guys are going to have to make sure I don't go down this rabbit hole too far. But the people that there's certain people out on social media, and I always tell people, be careful about watching social media because you just might believe what they're saying, including us. We always say, you have to verify what we say. Um, but they're looking at that number on the page as a sales system. Look at these evil people over there. They're keeping more of the money, or why wouldn't you have more cash value the first year? They're evil. Why are they doing it? Because they're getting paid more. And the fact of the matter is, a person does get paid more if you're thinking long range. Okay, that's a fact. And I tell people that all the time. Yes, we're going to get paid more. But I tell them if you understand the benefits of that, why do fees matter? Why do you care what people get paid? Because if you get what you want, and that's a lifetime of banking that you can control, that will have very little chance of what we call imploding or not functioning correctly, very little chance, then why do you care if the insurance company gets paid more or the agent gets paid more? You're getting what you want. So when you see people that are trending and they're trying to tread on people that are making more money, or the insurance companies are making more money, or you got to use the big four out of New York because they put caps on the commissions. And what they don't tell them, there's other benefits they give people. I mean, Rachel, our agency of Penn Mutual, who's no longer in New York, but they had a special marketing agreement that they did. It wasn't a commission, but they gave us more marketing dollars. It's the same thing. It's just a way to get around the regulations. The big four have the same thing. It's about compensation, not about commission. So if people are you're listening to are not thinking long range or not helping you think long range, that's something that you should think about. And if they're telling you, oh, you can quit after 7 years, that's Nelson's tenet of you're afraid to capitalize. So don't be afraid to capitalize. So somebody's saying, look at this. I've got this great design. You only have to do it for 7 years and you never have to do it again. Oh, you're never going to bank anymore after 7 years? I mean, if you understand what they're trying to get you to, the way they're trying to get you to think, you'll understand that they don't have your best interest in mind. Thus, have a sales system. The next thing is don't steal the peas. And that's if they don't emphasize the fact that, yeah, just pay your capital back because that's excuse me, that's the same thing you do at a bank. You have to pay the loans back. You have to put more money into your banking system at the bank. It's the same thing. The next one is a little bit more difficult, and this is a higher level of thinking that I think it takes people many, many years to really understand is don't do business with banks. And a lot of people don't understand exactly what that means. They think it's something like, oh, yeah, the banks are evil, so don't do it. They're making all the profits. That's really not what it means. And that's what people think it means. What it means in the Austrian way of thinking is if we limit the amount of lending we're doing from the banks, we're limiting the money supply that's in our economy. And if we can limit the money supply in our economy, we keep inflation lower. And if we keep inflation lower, guess what? You don't have to pay as much for goods and services. And if you don't have to pay much as good as services, you don't need a big pile of money. I mean, it's a more difficult thing. If you believe that prices rise because of corporate greed and capitalism and people just want to make more money, then you don't understand how inflation really works. And then the final thing is the one we're doing even in this episode is we're rethinking our thinking. We're constantly looking at things from a different angle and helping the listeners look at things from a different angle.
Bruce, I love that you shared that, especially the part about Austrian economics and how the connection point to your role as a banker to have an impact on the greater economy by not contributing to a problem. I think what's really interesting about this is that we started by saying infinite banking is not life insurance. It's not a sales tactic just for life insurance. You have to understand the problem. Okay, so the problem, if we extrapolate from Bruce what you just said and really be clear on what is the problem versus where does infinite banking fit in this whole schematic? Infinite banking is solving a problem of money flowing from your hands to the banking system. Why is that even a problem? It's a problem because you're not in control of your own capital. And Becca, maybe you can share an example even from your book, Beaver Bankers, on this idea. Would you mind sharing this idea of
Yeah,
controlling capital?
not at all. So it's kind of the idea in the little beaver banker story is that there's, if we think of it like a stream running through our lives or a stream running through a meadow or, out in the country, whatever, the default is that it all flows away. And it's pretty to look at, and it's water, it's useful, right? But what a beaver does is it builds a dam to create a pool and really create an environment that it can live and thrive in, that it has everything that it needs readily available. It's protected. Like beavers are very slow on land. They're not they're very vulnerable to predators. But once they've built this pool, this pond, then they're safe. They can dive under. They build things under. They build canals. They're very ingenious little suckers, right? And they create their own environment where they have access to everything they need. And I think the the comparison there is if we think of all the money running through our lives. I mean, most of us have millions of dollars run through our hands, but then we look back and say, well, how much of that do I still have? And usually it's not very much. And so the problem is that it just flows through us. It doesn't flow to us. So what we're trying to do is create a system that um, a feature of that system is money flowing back to us in increasing measure for the rest of our lives. And Nelson, I think, tries to give it to people in bite-sized chunks. He'll talk about the 34.5% of interest that most people are paying out to banks and third-party institutions, and we want to recapture that. And that's absolutely, we certainly do. But there's one little sentence in the middle of that chapter about the problem, one sentence that I think I just breezed past, and I think most people do. He says, the rest is financed by paying cash and giving up the opportunity the interest that money could have earned. And so I don't think it's even a 34.5% problem. I think it's a 100% problem. It's all flowing away. And we can systematically, little by little, recapture that using this tool of dividend paying life insurance and really create a new hub of our financial lives. Instead of the banking system, the commercial bank being the hub of our financial life, little by little, we transfer that over into this other financial instrument that's more beneficial to us. And it takes a little bit of time, right? And like Bruce was saying, if you're just looking at year one, you would say, why would I do this? This looks like a terrible idea. Right. But I know for us, we found this about 5 years ago, and our first policy is coming up on like the 5th year anniversary. And something kind of neat happens in that somewhere around in that time frame. And that is that everything that we're putting into premium, whether that's base premium or PUA or whatever it is, everything is being reflected in the cash value and more. so so it's like we're reaching this threshold for, we're not old, but we're not young either. But for the rest of our lives, that's only going to get better. Every time we make a premium payment, whatever we put into there is being reflected more in liquid cash value that we can use. We're receiving a dividend every year. And all of this, it's pretty amazing to think this only gets better for the next 50 years, 60 years, however long that we're blessed to be on this earth. And it's like, okay, we have our own little pond, just like the beavers, and we're going to continue to add to that, but we can use it for anything we need. It just takes the stress off of life, knowing that you have that there. We can use it, we can put it back. It doesn't affect the future growth. I think one of the, in our former system of just, we were cash payers. We wanted to save up and pay cash for everything. But it made me, not to my husband so much, but it made me kind of hot fisted and stingy, even with our own family, because I'd be like, no, we can't spend that money, because if we do, we won't have it in the future. We can't interrupt the growth of that. We have to save, save, save for the future. And this has really brought a lot of freedom of saying, oh yeah, we have access to all this that we can use, and we can put it back. And yeah, we're going to pay a little bit of interest. But the trade-off on that is that the compounding of that never gets interrupted. And that is, it's again back to the unseen, something people don't see, but it's super, super powerful. And so once you kind of get in the middle of it, you're like, wow, this bike ride's fun. Right? How can I do more? How can I expand my system? How can we take out policies on more people, to finance the things we were going to finance anyway?
You're
I
going to pay,
think,
pay
go ahead.
interest, but you're not going to give up the ability to earn interest. And that's what everybody forgets. Um, when
Yeah.
when they're trying to, Rachel, I don't know where you're going next, but you know,
Wherever we want to go.
well, people are when they're pointing to numbers on a page, or they're challenging you, like what is the rate of return? Um, I would say it doesn't matter what the numbers on the page are, or the rate of return on any place you place your money, including investments, unless you have the behavior to actually put the money in those places. So that's the most important thing first. And
Mm-hmm.
Becca had that behavior. She put the money someplace. She saved it someplace. Most people don't have the behavior to even save at the beginning. And why? Because they probably do not feel like it's the right place to put something, or they're scared to put it someplace. It's funny though, they'll if they do, they'll store it in a bank, and they don't feel scared. Um, but they don't get the other things that we talked about with the five tenants, when you do that. So, and by the way, I just want to clarify one thing. When we're talking about 34.5%, we're not talking about a rate of 34.5%. We're talking about a volume of 34.5%. So if you have $100,000, what Nelson's saying is $34,500 is actually flowing to the bank as far as the financing cost of that. So a lot of people may say, well, and I know, especially with very, what I would call, I don't want to use the wrong word here, but very confident people,
Hmm.
uh, they would say, well, I could overcome that rate. I'll just make a greater rate of return. but it's the volume. One of the good things that people do on social media is when they show how much the volume that you actually pay for a mortgage, as far as how much flows to the mortgage company or the bank, as far as the volume. You take out a $500,000, a mortgage, and $500,000 of that is interest that goes to the bank. And it's just,
You buy it twice, right?
yeah,
Once for you and once for the bank.
yeah.
Yes. And when you do that, so all the financing that goes into the hands of the bank is then participating in this inflationary environment, which is the bank is taking the capital they have, they're making loans using a fractional reserve system where they're holding a portion in reserves, they're making loans on the rest of the money, meaning that the money supply is being created or expanded by that process, which then is trickling into everyone else's the experience that we're having by inflated costs of everything. And I just want to come back to what Becca was saying for a minute because I think there's no clearer picture on what the real problem is and how to solve the real problem than the beaver analogy, I think, because if you have all of the dollars flowing out of your control, you could think of, let's just say, for complete simplicity purposes, I know everyone makes more than $100 in a month, but let's just say you have $100 come into your bank account in a month, and whether you have a payment to the grocery store or a payment to your mortgage or a payment for your car loan and you have a payment for clothing or whatever you're going to do, vacation, eating out, all the things that you're going to do in a month. And before you know it, taxes and all that money, the $100 came into your hands and then left your hands. And Becca, that's exactly what you're saying with this stream that flows. It doesn't get captured anywhere and it goes out the door. Now, where is it going? Well, it's being stored in the meantime. When you have it, it's deposited into a banking institution, usually not yourself, but some other banking institution. And then you're paying from that banking institution to another person who puts it in the banking institution. So the money is going back all the time to the banking organization, the system of banking that is not in your personal control. And when you look at that, the value of putting that dam in and capturing those dollars so that you have control of capital means I'm not just putting them in someone else's bank for their reservoir and their reserves. I'm putting it in my own reservoir for my own reserves. What does that mean? It means storing it in a place that you control, that you can access, that you can use, that you can earn interest on, that you can earn a rate of return, that you can not have flow out of your hands. And then that is solving the banking function. That is then being the person, the location, the unit that is storing capital. So if that's the only shift that somebody makes to recognize dollars are flowing out of my control, not good. Dollars staying in my control, good. Let's find a way to store them in my control. Great. Okay, so that's the first shift then. And if that shift allows you to then just have some way of capturing capital, whether that's in, I don't know, a safe, whether that's like some mechanism of having dollars that you keep in your accessibility. I mean, I don't know if there's a better way I can communicate this, but if you can hold dollars inside of your control, that's really what reclaiming the banking function is about. And then we're looking at from that position, what would be the ideal tool to do that? The challenge is if we just use a savings account, we're still participating in the same banking system that is causing the inflationary environment that is putting capital not in our control. If you put money in your safe, you're in control, yes, but there's just not as much. I don't know. That's a little trickier to be able to
Yeah.
access and use the capital. Do you guys want to
Well,
add anything to that? Go ahead, Becca.
just one thought, Rachel, I'm love anytime I can take this out of money and put it into other things, like other analogies. So I have a constant reminder out in our front yard of how important the environment is to the seed that you plant. I'm not much of a gardener. I do not have much of a green thumb, but my daughter's kind of getting into this, right? So She planted back in the spring. We have a pot out in front, and she planted a bunch of zinnia seeds. And so they started sprouting up really quickly. They're sprouting up, they're coming, and she's all excited. And then maybe a month or two later, she decided she wanted to plant some in the soil in the flower bed. So those started coming up now, I don't know, 2 or 3 months later. The ones in the pot, which were planted earlier, are about this high. There are zero blooms. The ones that she planted in the soil are probably 3 foot high. I bet we have 60 or 70 blooms. They're just beautiful. And so it's like you would think that it wouldn't matter where you plant your seed, but it matters a whole lot. In that pot, they were too crowded. There was too much competition. I probably haven't fertilized or changed the soil in 3 years. They probably had no nutrients to get what they needed anymore. But we plant them in this fertile soil, and man, it creates something that's amazing and beautiful, and it's going to come back. It's going to reseed itself. It's going to come back again and again and again. And so I think what you're saying is when we've realized that we need to find a place to store capital, where it's in our control, where it's benefiting us, then that next step is okay, what's the best environment to do that? What's the best tool I can use that would keep my money growing for me while I could use somebody else's? Well, I could use a CD, I could use a margin loan from an investment account, I could use a HELOC on my house, I could use a participating whole life insurance company from a mutual company. And so when you start looking at the options, it becomes very clear that the benefits of using whole life insurance from a mutual company, man, that's where it has everything. It has everything that we're looking for in that one thing. So infinite banking isn't about whole life insurance. It just so happens, like Nelson said, it already has everything built in that we need to grow and flourish and prosper and be in control and be sustainable, and come back and continue to feed itself and grow bigger and better and more beautiful over time, um, with the least risk, the most guarantees, the most control. So be choosy where you plant your garden because it matters.
That's very, very well said. And zinnias are amazing. We have some too,
Oh, they're
and
so beautiful.
they're amazing. And I love that analogy because that gives clarity on the difference and the separation and why life insurance would even potentially be a solution because it allows you to store capital that is in your control, that you can access, that is growing, that you can have uninterrupted compound growth no matter how many times you take loans and repay them. It never stops the growth on that money. You're getting paid dividends, and you then have a death benefit on top of that, which is
Oh
then
yeah, there's a death
able,
benefit.
yeah, oh yeah, it's actually life insurance. So it is then able to pay a death benefit into the next generation or whoever you want to benefit, whether that's Bruce, aunts and uncles, or nieces and nephews, or it could be a charity, it could be your church, it could be anything that you want to benefit from that capital. Maybe it's your family. In my case, it's my family and the trust of that our children will benefit from. And so when I look at that, I have the capability to provide capital that would be the seed that's hopefully planted in good soil for my children to have this exponential growth continue and not be interrupted even at our death.
Yeah. And if I could borrow something Joe says, I don't know if he's listening today, but a lot of times he'll talk about that analogy of seed. And what we're trained to do is we're trained to give our seed to someone else. Put all your seed in the bank. The bank's going to go plant it. The bank's going to reap a harvest and they're going to give you back a couple of seeds. Where what we're saying is you could plant that for yourself and it's going to take a little time for it to grow and start bearing fruit. But then you're the one that's benefiting from the harvest and you're not being dependent on, somebody returning you a couple of seeds. We're starting to control our own destiny in that manner that we can do that. We can plant our own seeds. We don't have to outsource that to someone else for their
Mm,
benefit and for their harvest.
that's so well said. And I think that if you're listening to this today and you're thinking, man, I really did think that infinite banking was just some fancy way of saying whole life insurance can allow you to somehow access your capital. That's a better place than storing it in the bank. Maybe that is where you're at right now. Maybe you are thinking, "Hey, I'm going to save somewhere. I'm going to put my capital somewhere. The bank account is getting barely any interest rate, and if I take the money out, it stops the compounding and I have to start that over. And instead
And
of
pay
that,
taxes.
what's that?
And pay taxes.
Yeah. Or I can have a better place to store capital than a savings account. And you're thinking, well, maybe life insurance would do that job. That's okay. If that's what problem you're trying to solve right now, infinite banking can help you solve that problem because it's reclaiming the banking function, not because it's a more ideal storage place than a bank account. Not because it just has a few benefits, not just because the benefits are amazing. It really is because it's changing the operating system of your cash flow. Bruce, is there any, I guess I'm thinking of a couple things right now. I'm thinking somebody's probably asking, what is infinite banking really about? Somebody might even be saying, practically speaking, how does, like maybe in terms of dollars, how does reclaiming the banking function change the ultimate outcome, or what does this mean? I mean, not to recap your example, Becca, but maybe what does this mean to use it as a banking tool or banking system? What does that mean in practicality? How do I actually do that? Bruce, what would you say to somebody who's kind of struggling with that?
I know everybody wants it to be more complicated because if it's more complicated, it has to be better. But it really just comes down to who controls the capital. And if you don't know that, if you're just a W-2 employee, I shouldn't say just a W-2 employee. That seems demeaning. I didn't mean
I was
the
going to catch you on that, Bruce, but thank you for thank you for
I mean,
that.
what I should have finished. If you're just a W-2 employee, it's easy to file your taxes,
Hmm.
okay? Because
Mhm.
everything about your financial life is on your taxes. It's very easy to see. It's very to understand where money's flowing, how much is coming into your control. Um, it's not as easy to see how much is flowing out of your control as it used to be, where you could used to be able to write off interests of your cars and credit cards, and now you can only write off some of your home interest. But it really comes that when you can really see this about being in control is when you're a business owner. And I have tons of business owners that either they do tax mitigation with their own tax professionals or they do it with our tax professionals. And they're able to do legal tax mitigation, but now on their 1040s, their tax return, it shows them making hardly any money or no money. And they go to the bank and they want to get a loan and they're denied a loan because they say, you're not making any money. Now, I actually have a mortgage broker. I have several mortgage broker friends. I actually was with one of them this past weekend, and they said, "Yeah, but regulations say we cannot explain that to um, the regulators, and they have to say, well, this is the money's that's coming in. We have to use this." I'll tell you another example of this. If a person has, and I'm just using this, it can be more, it can be less, but $1 million in a qualified plan, which is like a tax deferred plan, like IRAs, 401k, so on and so forth, but they show no income coming off of it. And they have a job where they may be only making $30,000 and they go and they want to go get a mortgage for a $500,000. Their income will not support their mortgage payment and they will not get a loan, even though they have $1 million in their IRA and 401k, because the regulations say it has to show income on the tax return. So they have to wait a whole year if that's the situation where they want to get a loan from a bank to actually show income, take it out, even if they didn't want it, to pay taxes on it, to put it on their tax return. And only then they can magically say, oh, you're approved, even though at any time they could take the money out of the IRA and pay off the loan. It's
So you're
because,
not in control. I think the point you're
right,
making is where
right.
you're, if you're storing capital in most of those places, the bank is not seeing you in a favorable light to be able to access capital in another method, even though you have the cash to back it up.
Yeah. So I have a dental client that he makes $1.5 million a year, but he's constantly expanding his dental practice. Now he hasn't been a dentist, a client for that long, so we haven't gotten him to the stage where he can slow down and truly understand the benefits of whole life insurance and using infinite banking. Okay, so he hasn't seen that except this past month. I went to visit him and he wants to buy a home for his daughter uh, to live in college, who, by the way, is going to have three other roommates, and it's going to positively cash flow. They already have it all set up. They already have the rental agreements in place, and yet because he did cost segregation, and we won't get into all that, but cost segregation on his commercial properties showed that he made considerably less money last year, and he has commercial mortgages on three buildings, and he has another house, and he has his own house, and the bank is saying you can't, we can't approve you for this other house, even though he's got all this cash flow because his last year's tax return shows that he didn't make any money. I mean, it's just ridiculous. And so he's totally out of control. He feels bad because he's already bought a home for his other daughter at the other college that she goes to. So now he's got to tell his daughter he can't buy a home for her where she can live in and she's got to live in the dorms. And I don't think there's anything wrong with living in the dorms, you know. But I'm just saying there's disappointment now from him, and he's furious because he makes all this money, but he decided to do cost segregation study that year and show that he made no income. So he's out of control, out of the control of the money. So now we have to have another strategy where we have to artificially next year, even though he can have these tax breaks, legal tax breaks that are in the tax code, we have to show that he's going to make money, pay taxes on it so that he can get a loan. As Nelson would say, don't you feel a little manipulated? Okay. Because Congress shows you these tax benefits that you can legally take, but they also pass banking regulations that say you can't do it this way. You can't have control get a loan. So to answer your question with that now or that example, it's mostly about just control. Because when you're in control, you can then suddenly maybe manipulate the rates of return a little bit, whether it's through an investment or whether it's through the banking function of how much you're going to pay yourself back and get more capital. That's another thing we haven't even talked about. But I would just say if people would just simply see the benefit of control, that's what infinite banking, the strategy of infinite banking gives you.
So, Bruce, I think that, I mean, to take that example one step further, I'm going to borrow Joe's phrase here a second. So, I think if that same scenario played out, where instead of the high income coming in and the tax mitigation showing no income on the tax return, if instead a large amount of capital had been directed into a tool or utilizing infinite banking into his own control, he would be able to utilize that capital to deploy rather than having to rely on the good graces of the bank saying, oh, yes, we are going to approve you based on their criteria.
Yeah, I think I've told this story on the podcast before, but I have another friend who I met through the equity world, the wealth, where he's an ETF trader, and he wanted to buy a condominium down in Florida because he's trying to get out of New Jersey because it's a high tax state. And but his daughter was still in high school, so but he saw a good deal, so he wanted to purchase this. But he's in business for himself. He needed $750,000, and his loan at that time was projected at 6%. But he was coming up on the deadline, and for people, and some of you listeners have felt this before. If you don't get it done at a certain time, then they can recast the loan at a different rate. And it was coming up on 7.25%. So if you didn't get it done, it was going to go from 6% to 7.25%. He calls me up and says, "Hey, remember when you looked at those whole life insurance policies that I had, and you told me that I can get access to this?" Because he was going to stop funding them. He had been doing it for years and years and years, and he had well over $1 million of cash value. He didn't know why he had $1 million, but somebody told him he ought to do it. So he thought, okay, I should do it. And he liked the death benefit for his daughter's protection. And he said, "How do I get that money?" I go, "I told you how to get it. Just call the company. They'll do a DocuSign, and you'll just one signature, and they'll transfer it into your bank account." And guess what? He did.
Easy.
3 days
Yeah.
later, he had $750,000 in his bank account, and he bought the place with cash. And I said, "Now, Andy, make sure whatever they were telling you, you were going to pay a mortgage payment. You're going to redirect that back into your policy to pay the policy loan back." And he got so excited. He calls me, "I can't believe it. It worked just like you said it was. The money's in my bank. I can just tell these bankers to forget it." I mean, the
In the
joy.
words of my 6-year-old, if they don't like it, they can put on their shoes and walk out the door. That's awesome.
The joy of having the control. And frankly, it was funny because he didn't know he had the control, because he wasn't doing this for infinite banking strategy. He was just doing it because he thought somebody told him it was a good idea. And he
Mm.
makes, a couple $1 million a year. So he has 8,000 a month. He's been doing this for years and years and years. And so
Which
it's,
shows just go ahead, Bruce.
yeah, yeah, it's the power of this.
It just shows the power of maybe he started those policies for the purpose of having a death benefit that would take care of his daughter. But what he realized along the way was this powerful financing tool because he had capital in his control. So he didn't have to go through the rigmarole and all the credentialing and all of the authorization necessary from the banking system that says, do you have enough income? Do you have enough? What's your debt to income ratio? And all of that. He didn't have to qualify through that. He just had the capital available and he was able to instantly take action.
It's the same joy people have when they pay cash for something. They feel like they beat the system. However, what they forgot is they also gave up the opportunity to make money, so they're still paying interest. It's just, it's
When they use cash, yes.
use cash. So it's the same joy. Like yeah, see, I didn't have to give you finance. I actually just paid cash for I pay, look how smart I am. I paid cash for everything. Well, you're smarter, but you're still losing the opportunity to make money on your money. And it's even worse than that. It's compounding. You're losing the opportunity to compound with your money also. So control, if people could just see the joy of control, I think that would change most people's mind. Don't overcomplicate this. I've been I've overcomplicated it in my career, because I felt like, well, in order for this person to understand, they have to know all these little nuances. Um, and I've kind of come back to where simplified it. Beaver Bankers is a great example of simplifying the whole thing.
Which, I mean, didn't Nelson say, I'm not good at quoting exactly, but he basically said, if you understand the problem, you know what to do.
Right.
Mhm.
Yeah.
And the problem is money flowing out of your control. Knowing what to do is infinite banking. If you can get capital in your control, you can have that joy of being able to be in control, to be able to not reset the compounding when you use capital. Yes, again, as Becca mentioned, you do pay interest to use the cash value, but you're earning interest all along the way. And it's not resetting, which means you're earning that uninterrupted compound interest, which is amazing. And you're getting paid dividends. And you have a death benefit that can create generational wealth. There's just so many amazing tools when you use, or amazing attributes when you use the tool of whole life insurance that's properly designed.
Yeah, I think people don't trust themselves, and so that's why they pay cash. I think that's deep seated for people, and that's why behavior is much more important than the design or even the strategy. Your behavior dictates the strategy. And so a lot of people are just like, I'm just going to pay cash because if I don't just pay cash right now, it's going to be in the bank and I'm going to just spend it somewhere else. And they don't trust themselves. They have to ask themselves, why don't you trust yourself?
Mm.
It's
And I
probably
think that go ahead.
you don't have any guiding principles.
And without guiding principles, it can be really easy to look at the numbers, the external stuff, and say, oh, higher rate of return, I must be smarter if I choose the one that says a bigger number.
But
And then, Becca, you were talking about seed, that bag of seed that you have. If you say, I don't know how to manage this, everyone else must be smarter than me, either the broker at some, investment bank or the banker at, you know, commercial name insert here. I'm not going to name any banks because it's a system of putting money in other people's control because we say, I'm not smart enough. The truth of the matter is nobody cares about your money the way that you do. And nobody is as powerful as you are to take what you've been given and to multiply it. And the best way to multiply it is to be in control, not to trust other people, not just to look at externals, but to look at the internal, which is ultimately you are your greatest asset. Man, we've been all over the place today. This has been awesome. We're going to have to be live later because the live stream did not work, but people are going to be in for a treat as they get to listen to this. And thank you so much for joining me, Bruce and Becca. I think this has been a powerful conversation. And so, if you have heard the idea that infinite banking is just a sales tactic for whole life insurance, I hope that you will recognize that infinite banking is a solution to the problem of money flowing out of your control. It is a way to reclaim the banking function. Period. Hard stop. End of story. The next chapter is if I'm going to reclaim that banking function, I'm going to try to figure out what is the best mechanism to do that. And that next chapter over here, we have discovered that we think, based on all of the evidence, that whole life insurance is the best place to do infinite banking. That being said, if you want more control, more access to capital, more financial freedom, more of that joy that Becca was talking about, more of that just excitement that Bruce was talking about of knowing, hey, I have the money, I can be in control, I can make this decision. I don't have to wait on someone else. I don't have to be controlled or limited by the criteria of the banking system who is in control, but instead I'm in control because I am storing capital, because I am the banker. If you want that, we'd love to be a part of your journey and your story. You can book a call with our team, and this would just get you started with the process to figure out how to implement this system, which is not a product, the system of infinite banking in your financial life so that you can have a new operating system for your cash flow and you can be in a position of control. We'd love to be part of that journey. You can go to themoneyadvantage.com, book a call on the front page with our advisor team, and we'd love to start that conversation. So we'll see you soon. In closing, please remember success leaves clues. So model the successful few, not the crowd, and build a life and business you love.